It's Saturday, December 5th, 2015. Non-farm payroll came out yesterday on Friday. Came out at 211,000. Was expected 200,000, so a better than expected number. Unemployment rate stayed at 5%, and the previous number was revised higher to 298,000 from 271. So it was a good number. Stock market went berserk and we'll finish up just under 370 points, up 2%. And yeah, gold and silver surprisingly went up more than 2%. Gold was up $25 and it closed above key 1070 level at finish around 1086. Silver finished up more than 40 cents at $14.55, I think. So yeah, pretty encouraging move by gold and silver despite strong non-farm. Usually gold and silver get hammered, when we see such a good number, non-farm number. Treasury yields dropped despite the spike on Thursday. We saw 30-year yields on Thursday up by 15 basis points and the 10-year as well. Yesterday they dropped by around 5.5, 6 basis points. I'm surprised, they didn't spike higher, with the strong data and the certainty now that the Fed will hike by 25 basis points on the 16th of December. But I think it's important to keep an eye on treasuries. I don't think they're out of the woods yet. And it could be related to the fact that a rate hike, even though it's expected to be only 25 basis points, when rates are at zero, a 25 basis point move is a relatively big move, and it could affect liquidity of the system, and that could affect derivatives, especially interest rate derivatives. And a lot of the treasury prices are dependent for price discovery on derivatives. So like Bill Holter is talking today on JS Mindset, yes, this rate hike could trigger a derivatives meltdown. And he also thinks that the Fed might be bringing the system down by design, pushing it with this rate hike. We know that the global economy is not doing well, and the U.S. economy is not doing well either, despite what this BLS number tells us, the Bureau of Labor Statistics. The U.S. economy is slowing down, and the financial system hasn't been fixed. It's just been patched up since 2008. Reforms haven't been the right reforms haven't been implemented. They haven't brought back Glass-Steagall, and if anything, now I think it was about a year ago, they legislated that investment banks can now tap FDIC insurance, which is supposed to protect bank depositors. They can tap that now for derivative losses. So, yeah, I agree with Bill Holter. And you might ask, why would the Federal Reserve want to bring down the system? But you need to know the nature of central banking. The Federal Reserve System was came into law in 1913. It was sold as an institution to benefit the public, to provide a more elastic currency, and to prevent financial crises like the Panic of '07. But if you look back since the Fed's creation, we've had so much mayhem in the financial system. The crash of 1937, the crash of '87, the spike in interest rates in 1980, the dot-com boom, the 2007, 2008 collapse. I think that the Fed has failed miserably in its supposed function. So I recommend, here from my little library, I've got this book. I recommend you read The Creature from Jekyll Island. It's written by G. Edward Griffin. Very good book, and it's the best book really if you want to learn the true nature of the Federal Reserve, the fact that they actually represent the banking interests and not the public interest. The Creature from Jekyll Island. You can get that on Amazon or eBay. You can buy it used on eBay, anywhere really. So I will segue into Congressman Charles Lindbergh because he was an opponent of the Federal Reserve Act back in 1913. He was a congressman from Minnesota. He originally came from Sweden, and he was also the father of Lindbergh, the aviator, the first man to fly across the Atlantic. I think it was back in 1927. But in 1913, he opposed vehemently the Federal Reserve Act. This is what he said about the Federal Reserve Act. When the president signs this act, Federal Reserve Act of 1913, the invisible government by the money power, proven to exist by the monetary trust investigation, will be legalized. The new law will create inflation whenever the trusts want inflation. From now on, depressions will be scientifically created. And he also says the new law will create inflation whenever the trust wants inflation. They can unload the stocks on the people at high prices during the excitement and then bring on a panic and buy them back at low prices. The day of reckoning is only a few years removed. Yeah, I know he said that 100 years ago. You know, you did have a day of reckoning 16 years later with the 1929 crash. But I think that's what the Federal Reserve System has been doing since the crash of '08. They've used all the public subsidy, you know, all the TARP funding and all the QE. They've used that to replenish the banking system. And yeah, I agree with Bill Holter. You know, they're ready to pull the plug, and this rate hike will exacerbate the collapse, in my opinion. And it will should begin soon. And they will, of course, you know, as Bill Holter says, they will use like a false flag event to blame the collapse on. So it doesn't look like the Federal Reserve is doing that, because they can't be seen to be doing that, you know, overtly. You know, can you imagine how the general public would be angered? But unfortunately, that's what I think they're trying to do. They lure people into the system, you know, borrow more and get leveraged, and then they pull the plug. And then after the collapse, you know, they will have even more control of the economy. I could be wrong, but, you know, I'm not trying to make it up. It's just that I've read a lot of these, you know, books like Creature from Jekyll Island, and there's more books on the Federal Reserve that I've read on the monetary system, and yeah, unfortunately, I think that's the way it's going to go. And Lindsey Williams still believes, you know, they're going to bring things down, or start the collapse, you know, before the end of the year. And you know, I know the Dow went up 370 points yesterday, so it might seem, you know, like everything's fine. But you saw the comment by, you know, Congressman Lindbergh. You know, they goose up, you know, stock prices. They lure people in, all the excitement, and then they pull the plug. So I would be cautious. Have a good weekend, and I'll talk to you maybe tomorrow or Monday. Take care.